What are the top 3 secrets to building wealth? This is what we'll be talking about today. They aren't really secrets per se, but they aren't practiced often enough to be considered common knowledge either, in my professional opinion. Sometimes we reach a place where we feel like financial success is out of reach. It starts as an idea, as either our money story or the people around us fuel this idea until we begin to believe it's true. We start to see evidence to support it, and it sounds something like this. Some common lies and myths we allow ourselves to believe. Other people are good with money. Building wealth comes from growing up in a wealthy family and knowing the right people. It takes money to make money. Maybe you've done the right things with your personal finances, but had a series of setbacks. Every time you think you're making progress, something else seems to come up. An expense you weren't anticipating or a change in your health. These concepts will help you build wealth. Because they sound simple, people think they can't work. Because the payoff isn't immediate, people start to quit because it seems like it's not working and we fear failure. We don't want to look silly for thinking we could raise above where we are now and when we can't. Giving up fun things in the short term without seeing the benefits is demoralizing. We don't want to admit that we are in this situation. We're in because of our own actions and reactions. Number 1. Secret to building wealth. The connection between self-worth and net worth. The first secret to building wealth is that high self-esteem is a necessary driver for wealth. You know how important your money story is, and the identity you've created from your experiences and what your parents told or showed you about money. But many people don't understand that this identity can carry is both self-perpetuating and, most importantly, can be changed. Who are you is not what you have to be. If your money story tells you that you are bad with money, that you are lacking some internal traits that make you worth of managing money, the resulting shame is at odds with your self-esteem. What does your money story say about you? Your money story may tell you that if you have money, you will spend it too quickly on the wrong things, and so you do. Then you feel shame that you were right about this, about yourself, so you spend money to make yourself feel better. You buy something nice. Then you join a club that your friend is in so you can buy their attention. Finally, you buy your kids what their friends have so they aren't tainted by this shame. This needs to compensate is mostly in your head and it's a vicious cycle. Healthy self-esteem gives you the confidence to make better financial decisions because you're able to separate your decisions from who you are. Spending without limits comes with guaranteed consequences that you really don't want. But as you build a persona of someone who spends without limits, you include your family and friends in the lie. By the time you realize your spending is out of control, it seems impossible to stop. You are too embarrassed to admit to other people how bad it's gotten. Your identity is tied up in the lifestyle and the major financial sacrifices you have made to build it. Giving up now means the balancing act will have been for nothing. Having to admit it was a lie to the friends you have worked so hard to impress seems like an unbearable embarrassment. Self-confidence individuals know that they don't have to prove anything to anyone. That's not money's purpose, and they don't let money have this power. They also know that poor decisions in the past don't determine future decisions. Number 2. Secret to building wealth. Live beneath your means. The second secret to building wealth is to live beneath your means. Warren Buffett bought his home in Omaha in 1958 for $31,500. He still lives there. It's a nice home worth over $600,000 now from inflation. But consider that this is a tiny 0.001% of his net worth. The billionaire says if he thought he'd be happier somewhere else, he would move. This is maybe the biggest marker of his success. He understands that spending more money doesn't make you happier. Another great example, Thomas J. Stanley's book, The Millionaire Next Door, was published in 1996 but remains relevant today. It was written from a series of interviews the author set up with millionaires. He went into it knowing very little about the people he was going to meet other than their net worth, and found that his assumptions about who has wealth were off the mark. Most of the individuals he met lived frugal lives and amassed their wealth slowly over time, often in blue-collar occupations. They weren't flashy, and people don't know they had money. Having fun with money versus having money to have fun. The people in his book had built satisfying lives, felt stable, and they had nothing to prove to anyone else. So many of us think we need bigger houses to show how far we've come. Outward appearance is a poor predictor of net worth, and keeping up with the Joneses is a surefire way to fritter away your money. Your income is your stepping stool to wealth. You can increase your income, you can work another job, you can win the lottery, but the easiest way to build wealth is keep a portion of the income you already have. The negative impact of high interest debt. It's really hard to save and save enough to move the needle if you have high interest debt. Look at your monthly spending. If you're paying the minimums on credit cards or other high interest debt, you have to address this first. You can probably tell me right now if you can afford the lifestyle that you're living. If you are scared to answer the phone and you get nervous in the grocery checkout when you swipe your card, it's time to do the work. Until you get your debt under control, you are in a spiral that takes a toll on your credit score, your relationship, and your health. Money should not have this power over you. Financial stability does not always depend on a growing salary. While an increase in income is nice, your financial stability does not depend on a growing salary. Aside from the practical implications of living within your means, it is an exercise in self-control that will serve you in other areas of your life. If you can learn not to inflate your lifestyle to match your income, you can grow very wealthy. Number 3. Secret to building wealth. Invest in what you understand. The third secret to building wealth is to invest only in what you understand. While Bitcoin may be blowing up, or you may read that the fastest way to wealth is the latest must-buy stock pushed by Motley Fool, speculative investments are just that. Speculative. Yes, you can choose a greater level of risk and hope it enhances your investment, but you're also more likely to lose money. After all, most people don't retire by gambling on the next Amazon. Review where your paycheck goes each month and come up with a plan to cover your needs and still save. If you have paid off high interest debt, paying it off will be freeing. If you need help getting started with this process, check out my article on paying down debt. You will gain confidence when you see how much your income grows without these monthly payments. The ability to live within your means and consistently save for the future means you can benefit sooner from compound interest. Investing in an index fund or retirement mutual funds means you can benefit from market inflation while minimizing your risk. The market will have its ups and downs, but unless you're retiring very soon, you just need to keep pace with it. Imagine if you put that money in a cookie jar in the kitchen instead. You may even feel like there's safer in the market, but just as you can no longer buy a stamp for what it cost 10 years ago, if you keep $5 in your jar, it is not worth as much in 5 or 10 years. Invest for retirement to reap many financial benefits. When you have invested money for retirement, there are many benefits. First, the investment will likely match inflation. Second, you will benefit from compound interest. You may start with $100 and it grows by 5%. Even if you add nothing to it, the next year you earn interest on $105. Because you put your money in an IRA 401k, your money is protected from taxes. If it's pre-tax money, you will pay fewer taxes because it's deducted from your taxable income. If you have a Roth, you won't have to pay a tax as it grows when you withdraw the money. Retirement money is protected even if you file a bankruptcy. First, the investment will likely match inflation. Second, you will benefit from compound interest. You may start with $100 and it grows by 5%. Even if you add nothing to it, the next year you earn interest on $105. Because you put your money in an IRA 401k, your money is protected from taxes. If it's pre-tax money, you will pay fewer taxes because it's deducted from your taxable income. If you have a Roth, you won't have to pay a tax as it grows when you withdraw the money. Retirement money is protected even if you file a bankruptcy.